evening, everyone. Now, welcome to our Let's Learn Futures webinar series. This webinar series is brought to you by Bursa Malaysia and managed by our company, Excellent. Now, we have a very interesting topic for this evening, which is mastering trend trading strategies in futures market. Now, our session for this webinar will be divided into two different sessions. The first 60 minutes will be covered by our speaker for today, CY Saw. And subsequently, we are going to have a 30 minutes of Q&A session. My name is Ting Ting. I'm the moderator for this session. Now, as usual, before we start, if you can hear me, can you please type in the chat box 222? I repeat, if you can hear me, you can see my slides. Can you please just type in the chat box 222? Very good. I can see many of you already on the line. You join the session. Now we are good to go. For those who can't hear us, you can see our slides. Please follow the steps here. Now please off your video so that you can have a better environment and sufficient bandwidth for you to follow through the whole session. Now, along the way, while CY is presenting, if you have any question, you do not need to wait until the end of the session. You can start to type in your question and ask us. We are going to answer your question at the end of the session. So if you have any question, you need to send your question in the Q&A box, and please do not send a question in the chat box. So what you need to do is you click on the Q&A box, then you type in your question and you send it to all co-hosts. We are going to answer your question at the end of the session. For your information, through question, you can even learn more via the topic itself. So question Q&A session is very important. Now, not only today, but towards at the end of this year, our last session for this Let's Learn Futures webinar series, it will be next Tuesday, and the last topic will be conducted in Malay. So for those who are interested in this upcoming topic on next Tuesday, which is pengajaran penting daripada pakar pasaran niaga hadapan yang terkemuka, if you're interested, you can scan this QR code and you can register accordingly. This will be the last session for this year, for the year of 2023. Now, not only that, we have our last session for our online workshop as well. For those who still do not know how to get yourself started in futures trading, or you do not know how to create your futures trading plan, welcome to join us for the last session for the year for this online workshop on 2nd of December. So it will be about 1 to 2 weeks down the road. So if you're interested, please scan the QR code and register accordingly. So we are going to have an online workshop 1 for the morning session, 3 hours, and online workshop 2 for the afternoon session, another 3 hours. Now, this online workshop is only suitable for those who really seriously getting yourself started in futures trading, then only you join the session, because this session is only going to limited to the first 50 online attendees. So grab the seat and register as soon as possible so that you are not going to miss the last session itself. Now, before we are going to start the webinar for this evening, please allow me to introduce our speaker for today. I believe many of you already know CY Saw. So CY is currently the lead trainer for Excellent, and he's also the hedging consultant for Excellent itself. He's a chartered market technician, chartered holder, and he has more than 10 years of trading experience in local and international stocks and futures trading. His specialty is in trading system and strategies, trading psychologies, and also coaching. So without further ado, please allow me to pass it over to you, CY.
Okay, so good evening, everyone. I hope you are all doing well today and are ready to learn some valuable approaches in futures trading. Now, in the dynamic world of futures or even the financial market, mastering the art of trading is actually an ever-evolving challenge for almost everyone. And figuring out the best way to trade can be tricky. And however, among numerous strategies available to traders, trend trading actually stands out as a compelling approach that capitalizes on the timeless principle of what we call as, probably you have heard before of this principle, which is the trend is your friend. Now, it's a smart way of trading. It's like going along with the flow. So if the market is heading in a certain direction, you go along with it. So trend trading is crucial because it lets you take advantage of what is happening in the market right now. And this trading approach helps you make the most of momentum that is driving the prices in a certain way. So you can take advantage of this opportunity by aligning your position and following the market sentiment. In today's webinar, we will look at why trend trading is so important. We will talk about the philosophy of trend trading and what are the tools and strategies you can use to take advantage of trend and understand what are the major challenges you need to overcome to be successful in trend trading. Before we begin, I want to give a quick disclaimer as usual. This presentation is for educational purposes only, and it's intended to give you a general understanding of trend trading concepts. It's not a substitute or a plug and play strategy. You still need to put in some effort on your side to develop strategies that suit your individual needs. That being said, I hope that today's session will help you widen your horizon and expand your knowledge about trend trading. So whether you're a beginner or an experienced trader, there is always something new to learn, and I'm confident that you will find value in the insights I will be sharing today. As Ting Ting mentioned earlier, my name is Chun Yan, but you can simply just call me CY. First and foremost, in my background in trading, I have been trading across different multiple time frames, from intraday scalping to short-term trading to medium and long-term trading. And one important element that recurring across these time frames is trend. All of us, we need trend to trade, and we need trend to gain from the price difference in order to make money. So which is what I'm going to share with you today about trend trading. Today, I will be dividing into 4 key topics that will help you understand trend trading in a broader picture. So first would be the philosophy and concept of trend trading. You need to understand what are the concepts behind and the nature of trend trading. Topic 2 would be on the types of trend in different time frames. Whatever time frame that you trade, it involves trend, and there are many different names used for trend trading. I'm going to break it down for you this later. Topic 3, I will be sharing with you on the tools and strategies for trend trading. What are the tools that you can use for trend trading? If you use the right tools, you can identify trend easily. And if you use the wrong tools, you are not going to capture the trend accurately. And lastly, the major challenges faced by most trend traders. All forms of trading has its own challenges. Same goes with trend trading. So, are you ready to take your futures trading to the next level or not? Let's get started. Now, before we begin, let's take a quick poll. How many of you here is currently doing trend trading? If you are doing trend trading, you can type in yes in the chat box. If you think that you are not doing trend trading, you can just type in no in the chat box, so that I know how does trend trading will be actually able to help you in whatever form of trading that you are doing. So I see majority of you is doing trend trading as well. So I see some people ask whether this applies to stock as well. The principle, yes, it does apply to stocks. However, you will still need to adjust accordingly with different products that you trade. All right. So many of you put yes, you are doing trend trading, and some of you put no. And maybe some of you are not quite sure whether you are doing trend trading or not. So don't worry, later on I will be sharing with you whether you are doing trend trading. Now another question, if you are not doing trend trading, then what kind or what type of trading that you are doing, I wonder. So you can share it with me. If you're not doing trend trading, what type of trading that you are currently practice, or what what are the things that you're doing in the market in order to make money. All right, you can give it a try. So there is no right and wrong answer. For some people, right, when I ask different traders, is that, what kind of trend trading that what type of trading that you're doing. Some people might be answering, I do swing swing trading. Some people will answer price action trading. Some would say scalping, intraday trading. So all of those later on I'm going to debunk, and we are going to see what are the similarities across for all of these types of trading. All right, now let's start with the first topic, the philosophy and concept of trend trading. Now, once you understand the nature of trend trading, what is trend and what is the characteristic of trend, then it's easier for you to build the necessary trading discipline to take advantage of trend trading. Now, in fact, trend trading is not something new. Don't be surprised with that. Let me show you why. Because in trend trading, there are many similar terms used, and most people get confused with that and thinking that all of these type of trading looks standalone and it looks very different. In trading, there are many types of strategy. There are short-term trading, there are swing trading, sometimes we call it trend following or even position trading. All of them, they have one common thing. They are using trend trading strategies and they need trend in order to make money. And that is how you profit from a trend. And the main difference is just only on the time frame that you trade and how long you are going to hold your position based on the criteria of your personal trend trading strategies. So for short-term trading strategies, you probably will be holding your position for a few days to even 1 week. For swing trading, you may hold your position for weeks, even up to months. While for those who are doing trend following or long-term time frame, you may hold your position for months to even years. So here you can see, regardless of whichever type of trading that you're doing, it involves trend. And besides, regardless of whichever language of trading books you read, right, whether is it English, Malay, or even Mandarin books, majority of those books, it emphasize on trend trading. Even when you read books of those successful legendary traders, their biographies, again, you will notice the same similar strategies that they are using, which is all are trend trading related. Although different strategies are described in different manners or even with fancy words, it actually all boils down to one simple thing, which is trend. And I believe you can agree with the rule number one of trading, which is follow the trend, uptrend buy only, downtrend sell. And by following the trend, you make money. Going against the trend, you lose money. So this is the core principle of trend trading. And although it sounds easy, but when it comes to real life application, many people don't have the discipline to follow this simple rule. Why? Because they lack of understanding in the nature of trend. So which is why it is important for you to understand what is trend. Now, I have a question for you. When you hear the word about trend, what is your understanding about trend? You can type in whatever keywords that comes into your mind, whatever keywords that is associated with trend. So I'm going to give you a quick 10 to 20 seconds to just to share with me what are the keywords that is associated with trend, or what is your understanding about trend trading. All right, some of you might put a direction, current direction, all right, which is correct as well. Up and down, some of you might put patterns, market structure, and you may have some other definitions, a bit more moving averages. All right, to make it simple, all right, whenever I don't understand a word or even simple words, right, I tend to look up into dictionary. So let's have a look at what is a quick and simple definition of trend from the dictionary. So here it mentioned it's a general direction of changes or development over time. So let's highlight the keywords here. The first would be the general direction. So of course in trading we have uptrend, downtrend, as well as sideways. We have changes or development. So meaning here there will be ups and downs, and in other words we call it fluctuation or volatility. And when you understand fluctuation and volatility, you will tend to manage risk. Risk management becomes your priority. You will not be having so much anxiety when the market fluctuates. And lastly, the final keyword here is time. Of course, this is a self-explanatory, right? Trend, in fact, it does take time to develop. So meaning, if it takes time, it also means that you need to have the patience to wait for trend to develop. So here you can see is that it is important for you to really understand about trend. And most people focus about how to trade trend. They focus on the technique, but they don't really understand the philosophy and the nature of trend. Why? It's easy to find entry point to trade the trend, correct? But it is really, really hard for you to, just sit through with the trend and have the patience for the to ride along with the trend, because there are lots of things that is evolving and happening in the market that will affect your trading psychology. So which is why when you understand the concept of trend, and when you are able to accept what is a trend, then it's easier for you to progress in trading. Now, there are two types of analysis for you in order to identify trend. So probably you may have already guessed it, right? So we have fundamental analysis and technical analysis. Fundamental analysis primarily looks at news, all of those fundamental factors like economic indicators that affects the product that you trade. And technical analysis would be primarily look at price action, price patterns, volume, and other technical indicators. So when you do this analysis, both of them also look at changes and development of trend. So let me share with you in the next few slides. First, let's have a look at the trends in fundamental analysis. Here you can see, for example, like Malaysia GDP. Of course, this is a little bit old data. We can see that there is, increasing in GDP. It's a form of trend. How about unemployment rate data? It's also a fundamental data. There is uptrend, sideways, as well as downtrend. Palm oil sector, if you were to trade FCPO, what are the consumption as well as production of palm oil? So there is a trend as well. If you were to trade stocks, you would be looking at, for example, a company's revenue or their earnings. You can see their trend as well. There is an uptrend, increase in revenue, or reducing in revenue. So here, in short, any other thing other than price, other than technical analysis, we call it as a fundamental analysis. Fundamental analysis also have trend as well. There are uptrends where the number is increasing. There are downtrends when number is decreasing, and sideways when there is no significant changes in the number. So whether the data shows you positive or negative towards the price movements, you need to equip yourself with the necessary fundamental knowledge to be able to analyze and interpret the data accurately. Now let's have a look at trends using technical analysis. This is a typical FKLI weekly chart. We can see that price going up, it's an uptrend. When price is moving in a specific range and not having a clear direction, it's a sideways. And if price comes down for a consistent period of time, it is considered as a downtrend. How about for FCPO? Similarly, we are able to see there are downtrends, sideways, as well as uptrend. So in short, you can see both fundamentals and technical analysis, there are trends in fundamental analysis and technical analysis. Whatever analysis that you're doing, it involves trend. Because why? Analysis, it is, I would say it's an initial part of your homework before you make a trading decision, right? So the first thing when you do your homework is actually you want to be able to identify what is the market doing, what is the trend right now and what is the trend later on. So later I'm going to share with you why and what are the tools that you can use for identifying trend. So simply speaking is that both fundamental analysis and technical analysis analyze trend. When you trade or invest, you need to follow the trend and not against the trend. We always go back to the golden rule of trading. Probably you may have read a lot of these from across different reading materials. Follow the trend, you make money. Going against the trend, you lose money. So think about this for a second. If there is no changes in price, there will be no trend, right? And if there is no changes in fundamental, same thing, there would be no trend. So one thing here we can conclude is that both fundamental analysis and technical analysis analyze trend. Now that you have really understand the philosophy and concept of a trend, let's have a look what are the types of trend in terms of a different time frame. If you use technical analysis, you probably may have heard of this theory before. How many of you here heard of Dow theory before? If you heard Dow theory before, you can type in 1 in the chat box. And in fact, for all technical analysis practitioners, you must know Dow theory because it is the earliest theory that sets the foundation in technical analysis. So if you use technical analysis but don't understand Dow theory, I strongly suggest you read up a little bit about what is Dow theory so that it actually enhance your understanding about technical analysis. All right. So simply speaking, Dow theory is a fundamental concept in technical analysis, which is a method of analyzing and forecasting price movements in the financial market. So particularly in the context of stock and stock market indices. So Dow theory was developed by Charles Dow, one of the founders of the Wall Street Journal. This theory is important for you to understand because it explains the phenomena in the market. It also clearly explains the structure of the market and how market works. So of course, I'm not going to go through all of these principles of Dow theory, but I would like to highlight one of the key principles that is very relevant and important in today's discussion, which is the principle number 2, the market moves in trends. Now, in fact, it is not just only the assumption in technical analysis, right? Because earlier I've already shared with you, fundamental analysis also follows the same rule. Prices move in trends. Fundamental analysis also looking at trends. When the fundamentals are getting better, the figures, the news is actually an uptrend, price moves up. And when fundamentals are deteriorating or even getting worse, fundamentals is a downtrend, price goes down. So same thing when it comes to technical analysis is that Dow theory, even when we look at the market, whether stock market or even futures market, the market in fact actually move in trends. Now, according to Dow theory, there are 3 kinds of trend. And do you know what are the 3 kinds of trend or not based on Dow theory? Some of you may be saying uptrend and downtrend, right? But in fact, that is the direction of the trend. In fact, Dow theory, it emphasizes on these 3 types of trend. So first would be primary trend or long-term trend, secondary trend, as well as the minor trend. So Dow theory, it explained that prices does not move, randomly, but instead it actually follows trend. This trend classifies into these 3 major types. In primary or major trend, you call it long-term trend. It may last from months to years. For secondary trend, we call it medium-term trend. It lasts from weeks to even months. And in minor trend, we call it short-term trend. So it lasts from days to weeks. Even though if you're doing trading intraday trend, right? Intraday trend also falls under the minor trend. Now let's have a look at this Dow theory. Later on, we are going to combine these 3 types of trend. So we have our x-axis, which is time, and y-axis in terms of price. So later on, I'm going to share with you three different lines in three different colors. So first, let's have a look at the red line, which is the minor trend. Here you can see it's like a very choppy market, up and down each and every day. So this is like the day-to-day fluctuation, a very small fluctuation day to day, which is what we call as noise. You will see this mostly on daily chart or even intraday charts. Secondly, which is on the secondary trend, which is the blue line. And this is like looking at the weekly changes. So if you look at the weekly chart, the trend seems like a little bit clearer and it does not have too many fluctuations that it's easier for you to identify the where is the market is heading based on weekly chart. And for a primary trend, which is the green light, it is way much smoother. So most of the time for a primary trend, you can see this on monthly chart. You can see the general direction of the market even clearer. Now let's put all of them together, because all of these three trends is actually describing the phenomena of the market only. Now let's have a look at the minor trend first. Okay, you can see there is a day-to-day fluctuation, and then later on, if we were to convert this daily price chart into, for example, weekly price chart, you can see that your secondary trend would be is exactly the same thing as the minor trend, because secondary trend it is way smoother, and for primary trend it is even smoother if you look at a monthly chart. So one conclusion that we can derive from here is that all of us are actually going through the same market. It's the same fluctuation, it's the same volatility. We all look at the same news, the same event that is happening around the world. The difference is that whether you understand the nature of trend or not. So which means when, for example, if you do medium-term trading or long-term trading, you would have to sit through the day-to-day fluctuations. If you do, for example, short-term trading, same thing, you would also have to face the day-to-day or even hour-to-hour fluctuations. It's the same thing. Now let's apply this into a chart for you to able to understand what does this Dow theory all about. So this chart, for example, here we can see this is a primary uptrend, and inside a primary uptrend there are secondary trend, and this secondary trend is not just only one phase only, right? There are multiple secondary trends in a primary trend. And similarly, in a secondary trend, there are minor trend, many minor trends in a secondary trend. So this is where we are breaking it down even further, which means in a minor trend, multiple minor trends would actually form a secondary trend. Multiple secondary trend will form a primary trend. So, which is why, irregardless of what form of time frame that you're trading, you are somehow or another you are doing a form of trend trading. Now let's have a look at the time frame. In terms of time frame, we have a short-term time frame, medium-term time frame, as well as a long-term time frame. Now different people have different time frame. Today for this diagram, we will be focusing on futures trading context. Everything in this time frame, we will primarily look at the perspective of futures trading. So here, which of this time frame that you're currently using right now in your trading? If you're using short-term trading, you can type in ST. If you're using medium-term time frame, you can type in MT. Or even if you're using long-term time frame, you can type in LT in the chat box, so that I can see which time frame that you would be generally trading. And most importantly, when it comes to time frame, a lot it's very subjective. Sometimes short-term time frame for majority of you using short-term time frame, right? So sometimes short-term time frame for another traders, it can be considered as medium term. So let's have a look what does short-term time frame consists of. Of course, we have in short term we can have as short as intraday. We have days and even up to 1 or 2 weeks. Medium term can be as short as 1 week, and for some people maybe up till months. Whereas for long term, it can be as short as 1 month and even up till years. So if you're doing day trading, you will be generally trading intraday trend. Sometimes day trading, we might be calling it, for some people, will be calling short-term trading. If you're doing medium term or even short-term trading, you will be trading trend that lasts from days to weeks. And if you're doing medium term or even long-term trading, all of those are what we call as position trading. If you don't hold position, you will call it day trading. If you hold position for overnight, generally I will call it as position trading. And that is actually, you will be also doing trend trading as well, because trend trading does not only limit to, you can call it whatever name that you like. For example, position trading, trend following, or even swing trading. All of them are actually refers to trend trading, right? So here you can see one of the common factor of all time frame is trend. So whether you're doing short, medium, or long-term trend, you are doing trend trading, and you need a trend to make money. If you trade short-term trend, of course, you will be likely to have lots of trading frequency. And if you are trading longer time frame, you will be likely to trade lesser. So here I am going to share with you 3 different scenarios, and let me know which of these scenario do you prefer. Now, the first scenario is that you put money aside for 10 years. There is no trend, no changes in price, and of course, there would be no risk for you. Second scenario, same thing, you put your money aside for 10 years. There is huge trend. You will be facing high volatility, which also indicates higher risk, and potentially you may be gaining higher return. And scenario number 3, same thing, you put your money aside for 10 years. The trend is small and very slow, which means it's lower volatility, and it also indicates lower risk, lower return. Now, which of these 3 scenarios do you prefer? If you prefer scenario 1, 2, or 3, you can type whichever number that you prefer in the chat box. There's no right or wrong answer. It depends on, when it comes to trading, different traders has different risk appetite or even risk tolerance. Some of you put majority is scenario 2, some is scenario 3. Well, sometimes some traders would prefer scenario 1. There is also sense in that. All right. So here I can say is that, irregardless whether you choose scenario 2 or scenario 3, what I would like to highlight to you here is that regardless of which scenario you prefer, there is volatility, and you need to be able to accept the result and the outcome you get for the volatility that you choose. Because trend, definitely it comes with volatility. Here you can see scenario 2 and scenario 3, there are trends. However, it comes with a different form of volatility. Higher volatility does not necessarily you make more money, correct? But higher volatility, definitely it comes with higher risk and also potentially higher return. Same goes with lower volatility. If the trend is slow moving and move very slow and steady, you will be comfortable with it. However, the return would be lower as well. So most importantly is that when you understand the nature of trend comes with volatility, and definitely it takes time to develop. So you need to be able to accept the outcome for the volatility that you choose. So when you do trend trading, regardless of you're doing short-term, medium, or long-term time frame, you need to be able to be comfortable with the volatility. For example, short-term just now you see the three types of trend, right? The minor trend, secondary trend, and the primary trend. Minor trend, it consists of many minor fluctuations. Of course, the volatility is low. So if you're doing short-term trading, smaller volatility will of course accompany with a lower return. And if you're doing medium and long-term trading, whereby you hold your position a bit in the longer time frame, you will be yes, you will go through high volatility, higher risk, potentially with higher return as well. So similarly, to understand the concept of trend, you need to understand this. Price do not go in a straight line, and same goes with your trading performance. And remember the nature of trend. Trend has volatility, and it takes time for a trend to develop. So when you do trend trading, you need to be able to follow your own pace and your own strategy. People have their own reasons to, enter and exit the market. So you don't have to actually follow other people's pace, because when it comes to trend trading, all you need to do is actually follow your own strategy, follow your own pace, so that you are able, you are comfortable with your own strategy. All right. Now, topic number 3, the tools and strategies for trend trading. Now that you have already understand the nature of trading, and whichever time frame that you choose, you are doing a form of trend trading. So in this topic, we are going to look into what are the tools and strategies you can use for trend trading. Now, trend trading or whatever trading you're doing, it can follow this general framework with only 3 simple steps, right? Whichever time frame that you use, short term, medium, or even long term, we follow these 3 steps. So step number 1, trend identification. When you look at the market, first thing you want to identify your trend first. Step number 2, you want to qualify trades according to your own trading strategies or your trading rules. And lastly, step number 3 is that you need to make your trading decision whether to enter or even exit the market. So each and every day, we are going through this same process, step number 1, 2, and 3. And each and every time when you look at the market, you have to go through step 1, 2, and 3. All right, I'm going to explain each section one by one. So let's start with the first section, trend identification. What are the tools you can use in order to identify trend? So of course, when it comes to technical analysis, we have 2 types of technical analysis, which is the classical technical analysis as well as the modern technical analysis. Classical technical analysis, primarily you will be drawing lines. You have to draw. While modern technical analysis, you don't have to draw anything because you will be using technical indicators. All of those indicators are already pre-made. All you need to do is actually plug and play and maybe change the parameters for the indicators that you use. Now let's have a look at the classical technical analysis first, which is drawing. So there are a few forms of classical technical analysis. Here I'm going to highlight a few ones. So of course the most traditional one, the most classical, which means you need to be able to draw lines, trend lines, support, resistance line, and even channels. So once you are able to draw lines, because line drawing is the most foundation skill for technical classical technical analysis. If you are able to draw this accurately, so this is where you are able to move on to the next phase, which is the chart, looking at chart patterns. Because looking at chart patterns, you need to be able to draw valid lines. Otherwise, it is difficult for you to identify the correct chart patterns. So chart patterns, we have head and shoulders, double top and bottom triangles, and many other forms of chart patterns. And lastly, classical technical analysis also looks at candlestick patterns as well as price formation. Now today we are going to look at the first one, which is lines, because lines is the most basic and the most foundation one. Once you're able to draw a line that is accurate and valid, this is where your interpretation by using classical technical analysis would be more accurate. Now, of course, probably you may have seen this diagram before. If you're using classical technical analysis, you need to understand the criteria of uptrend and the criteria for downtrend so that you are able to draw the trend line correctly. So for a typical uptrend, you will have higher low as well as higher high, whereas for downtrend, you have lower high and uh, lower low. All right. So here you can see when you read books on technical analysis, you can see criteria for uptrend and downtrend. While it is very difficult for you to actually identify if there is any criteria for sideways trend. All right. So let me give you one tip on how to be proficient in using technical analysis. So take note on this. Okay, this is a very important tip for you to be skillful in using lines. Focus on identifying uptrend and downtrend using these criteria. Okay, uptrend, higher lows, higher highs, downtrend, lower lows, lower highs. Because the criteria is very clear, it is straight forward and clear cut. However, sideways are very, very difficult to identify because the criteria is tricky. All right, I repeat again. If you want to be proficient in using classical technical analysis by drawing lines, focus on identifying uptrend and downtrend. This two trend is good enough. All right, because sideways is difficult for you to identify because sideways is most of the time is very, very tricky. So you need to be able to train your eyes to look at higher high, higher low, lower high, and lower low for downtrend. So when you are able to do this, it's easier for you to identify whether the market is heading in a particular direction. Now let's have a look at the chart. So for downtrend, it's easier for you to identify, which is all you need to do is actually focus on the high, lower highs, and connecting these two dots. You can see there is a downtrend. Price below the line is a downtrend. When the price breaks above the line, it means that the trend has already changes. Similarly, for uptrend, there is a higher low. So you can see there is one low and then another low is a higher low. And similarly, the criteria for uptrend is that when price is above the trend line, it is considered as an uptrend. When the price breaks the uptrend line, it would be considered as a downtrend already. Whereas for sideways, I'm not going to go into this because sideways, as I've already mentioned, it is very, very difficult to identify until you are able to see the sideways actually form. And in fact, if you look at sideways, right, you can see in terms of long term, you can see sideways very clearly. But if you are doing, for example, short-term trading, it's very difficult to look at sideways. Why? Because remember the Dow theory on minor trend. Minor trend means that there will be minor uptrend as well as minor downtrend, minor uptrend and minor downtrend. So which is why I mentioned it's very difficult to identify sideways. Sideways would generally occur during secondary as well as primary trend. If you are looking at minor trend only, it is very difficult to identify sideways. So which is why it would be easier for, in technical analysis, is for you to identify uptrend and downtrend. These two trends is good enough. So how about modern technical analysis? Now, modern technical analysis, of course, we will be using technical indicators. So later on, can you let me know which of these indicators that you are using? Modern technical indicators, we have three categories. The first category, which is trend category, primarily looking at the direction of the prices, whether is it going up or coming down. We have moving averages, bands and channels like Bollinger Bands, Donchian channel, and more. Another category, which is the momentum category of technical indicators, we have MACD, MACD, momentum indicators, and others, as well as oscillators. We have RSI, stochastic, Williams percentage R. So can you let me know currently which of these indicators that which are your favorite indicators? Can you share with me in the chat box? You may be using one or two in a specific category, or maybe use combination of all of those. All right, I see some of you moving average, MACD, Bollinger Band, RSI. Some of you using individual indicators only. Some of you, majority of you, combination of one trend and another momentum or oscillators. All right. In fact, here, in fact, if you were to refer to technical analysis books, right, or even some websites, the definition here might be a little bit, it might have some overlapping in definition, because trend indicators, in fact, simply speaking, all right, anything that you can put on the price chart itself. Later on, I'm going to share with you how to know whether the indicator that you're using is a trend indicator. Some momentum indicator, it's a hybrid, it's a combination of trend and momentum. It can use as trend purpose, it can also use as momentum. Similarly, for oscillator indicators, it's also hybrid, like momentum and oscillator, this combination of both. But when it comes to trend trading, remember the three steps that I've already shared with you. The first step is always identify trend. So all we want to do is actually focus on trend indicators first. Trend indicators will do, all right? Because it tells you the direction of the trend. And why we want to focus on trend indicators is because trend indicators, it immediately shows you the direction of the trend. Whereas momentum and oscillator indicators, generally, their primary function is not so much about showing trend. Their function is actually showing the strength of the trend, whether the trend is strong or the trend is weak. So let's focus on trend indicator here first. How do you know whether if the indicator that you're using is a trend indicator or not? Now here is a typical chart that we are going to use for here. Here I've already pulled out some indicators. So on the chart itself, we have moving average, and on the bottom of the chart, we have MACD. So all you need to do is that some of you might be very new to indicators, right? You can actually go home at your home, look at the whole list of in technical indicators library, and then plug in one by one and see whether your technical indicators fall in terms of your price up here, or whether is it your indicator goes at the bottom of your candlestick chart. So very simple, how to know your indicator is a trend-based indicator is that a trend-based indicator, generally speaking, it would be attached directly on your candlestick chart. Okay, this most of the time would be trend-based indicator, whereas all of other indicators that falls underneath your candlestick chart, they are most likely momentum or even oscillator indicators. All right, so all you need to do when it comes to doing trend trading is that select a trend trading indicator that you are familiar with, study comprehensively, know in depth, as well as build trading strategies focusing on your trend indicator first. Okay, I have seen a lot of people combine too much indicators, but when it comes to looking at which indicators come first, which signals that you want to look at first, okay, as I've already mentioned, all forms of trading, we are actually doing trend trading, correct? Whether you are doing short-term trading, medium or long-term, or even if you do intraday trading as intraday trend, right? So as long as you need trend to make market, no, not trend to make market. As long as you need the trend to make money, you need to look at the direction of the market first. So which is why trend indicator is the number one thing that we want to look at. Always build and develop your trading strategies focusing on trend indicator first, because the number one thing you look at direction. What is the trend first? Whereas for the secondary part, only we look at momentum or even oscillators. All right. So step number one, trend identification. I have already shared with you. You can select any indicators that you want, focusing on the direction of the market. Now let's move on to the second step, which is your trading strategies. How to qualify trades according to your trading rules. What is your criteria for enter as well as exiting the market based on after you are able to identify the trend. Now here a very basic trading rule, which is uptrend buy only, downtrend sell. All of us knows, right? And here is one of the commonly used indicator, trend indicator, which is moving average, which in fact my primary favorite indicator is most favorite indicator is also moving average. So moving average, let's have a look what is the basic strategy for moving average here. Uptrend, there is a clear criteria for uptrend and downtrend for moving average. So for uptrend, the criteria to look at a moving average is when the price is above your moving average line. So this is an uptrend. And when the price is below your moving average line, so this is what we identify the market is a downtrend. Now let's plot into the chart and to identify when is the market uptrend or downtrend. So here I'm going to highlight this part is actually uptrend. You can see the candles, all of the price are above the moving average line. It is an uptrend. The following one would be price below your moving average line. It is a downtrend. When price crosses up the line again, you can see this time would be an uptrend again. Price below your moving average line, it is a downtrend. Price above moving average line is an uptrend. So it's easy for you to identify a trend, right? So irregardless of what kind of technical indicators, trend-based technical indicators that you use, you need to have a very clear, simple and clear criteria for you to be able to identify when it's uptrend and when it's downtrend. When you are able to identify uptrend and downtrend, then this is where it's easier for you to make trading decisions. If you are unable to make trading decision, take a step back, okay? Because making trading decision is actually the final step, okay? Later on, we are going to come into that stage. So the basic trend trading strategies, as you may have already know, very simple, which is uptrend buy only, downtrend sell. Rule number 2, cut your losses short. Don't go against the trend, because if you're going against the trend, you have to pay the price, which is you lose the money. And rule number 3, very simple. If you're doing trend trading strategies, it means you need to let the profit runs. As long as the uptrend is still intact, you follow the uptrend. If the downtrend it is still intact, you follow the downtrend. Always follow the trend and ride the trend so that you are able to take advantage of the momentum of the trend as well as the direction and earn as much as possible. All right. So, of course, you might be saying that, these 3 basic trend trading strategy in your mind is that, it's so basic. You might already know, all right? But don't look down on these 3 basic strategies. If you look at, 100 books of trading strategies or even in technical analysis, all of those books are actually saying the same thing. It all goes back to these 3 basic trend trading strategies. Uptrend buy only, downtrend sell, cut your losses short, let your profit runs. And irregardless of what technical indicators or trading strategies you use, you still need to follow these 3 basic rules. All right. Now, of course, when it comes to trading, technical tools is like the tools that you're using, and of course, different tools would end up. It has different functions. So, for example, if you have different carving tools, if you have the skills, definitely you are able to carve it. It becomes a very nice and good art. It becomes valuable. Now, one thing that I would like to highlight to you is that, when it comes to trading, do know that indicators are just tools only. Even technical analysis are those tools only. The most important thing when it comes to trading is that you need to focus on building trading strategies and skills. You can have the best tools in the world. However, if the strategies and skills are not solid and not firm, having a good tools is not going to, you know, uh, make you progress as a trader. So it's very important for you to focus on building good trading strategies as well as skills. Now, lastly, on topic number 4, I'm going to highlight to you some of the major challenges of trend trading. Now, here are a few questions for you to ask yourself. Honestly, okay, just take some time for yourself to ponder. Are you able to ride along with the trend or not? Look across your past experience and history in your trading. Are you able to ride along the trend? And most importantly, are you comfortable riding the trend by holding positions throughout the period or not? Now, I understand many of you are able to ride along short-term trend only, but when it comes to medium or long-term trend, it becomes challenging. It's no longer easy anymore because riding medium and long-term trend, you will be experiencing price fluctuation and volatility, and sometimes you will be experiencing your profits evaporate. You can't sleep at night. You're afraid of gap opening, retracement, short-term pullback, global news, or even local news. You might afraid that your profits become a loss. So, which is why many people do short-term trading, but in fact they want to do medium and long-term. They want to capture a lot of money, but they do short-term trading, which is why a lot of people they are not comfortable with riding along the trend. Most people take profit too little and too soon. So think about this. If your trading model is each of the winning trade is smaller than each losing trade over the long run, it is actually a losing business. So if you want to make money in the business of trading, you want to make sure that your winning is always bigger than your losing. And in order for your winning to be bigger than your losing, is that again we go back to the very basic of the trend trading rules, is that ride along with the trend and cut your losses short. Now, question for you. What are the challenges you are currently facing in trend trading, regardless of what time frame that you're doing, short term, medium term, or long term? Share with me what are the challenges that you face in trend trading, so that later on I am going to share with you how you can overcome this so that you are able to capitalize and take advantage of trend trading as much as possible. Because a lot of the challenges and problems is actually a very simple problem to solve in trading, right? So I see some of you shared is that late entering and late exiting, cut losses, follow trend but hit cut loss, get up or down overnight, sharp entry, stop loss too early. All right, I see. So in fact, some of these challenges, it's actually very, how to say, it's quite easy to solve, okay? Because when it comes to trading, the challenges that you face has been faced by many other traders. So the most important thing is that you need to be able to find solutions and how to solve it as quickly as possible, and then keep practicing until you are able to get it correctly. Because like today's webinar, it's easy and simple to understand. Oh, I understand the philosophy and the nature of trend, but when it comes to really writing the trend, that would be really challenging your intellectual understanding whether you get it correctly or not. Now, let's have a look some of a few major challenges of trend traders in futures market. Now, firstly, of course, you do not know if you do not how to enter the market, or entering too late entering or too early entering. Most likely, you fall under the first challenge. You do not know how to identify the trend yet. So, which is why there will be late entry or early entry, and then when you look back when the market happens again, you say, "Oh, I should have entered at this particular specific point." So very simple for you to solve is that, of course, you need to simplify your trend identification method. For some of you, maybe if you take too long time to identify trend, you sit in front of your laptop and analyzing for 1 hour, 2 hours, and you are still not quite sure whether the trend is uptrend or downtrend. There is no clear cut of trend for you, all right? So which is why you take too long time to identify trend. Or maybe your method is too complex to identify, too many rules, too many criteria. Or maybe you just don't have confidence in your method. So all of this falls under challenge number 1. So how you can do is actually go simplify, okay? Go as simple as possible. Reduce all of those unnecessary criteria. Start from the very scratch first. Simplify your trend identification method so that it's easier for you to follow. It's easier for you to make a decision. If your method is hard to identify, it defeats the purpose of trading, right? Because by the time you are able to identify the trend, the market you might have already lose opportunity there already. Now, the second challenge, of course, it would be some of you might say, I see just now some of you put stop loss or fear profit turn into losses. It actually falls into challenge number 2, fear of the volatility. Because trend, right, there will be price changes. And remember the definition of trend price, that there will be changes in the market. So definitely there would be volatility. The market does not move in a straight horizontal line, flat line, right? So fear of volatility, as well as no patience. I don't see any people put no taking profit too soon. But when it comes to one of the challenge for a lot of traders is that when you are able to have a taste of profit, when you're seeing your trades is making money, you have a lot of temptation to taking a profit too early and too soon. So both of these, again, challenge number 2 and number 3, very simple to solve, is that you need to understand the nature of trend comprehensively. All right, which is what I've already shared with you in the first topic. Why? Because trend is always your friend, and so does volatility. Because when you want to do trend trading, short-term trend, medium or long-term, the trend is always your friend. It can be your friend if you do it correctly, or it can be your enemy if you don't have the necessary discipline to cut losses or to follow through. And most importantly, the third thing is that trend always takes time to develop. All right. When you do trend trading, even though you are doing intraday trading, right? If a trend takes 1 hour to develop, you really need to be patient for the whole 1 hour. Okay. Don't expect 5 minutes for the trend to develop and then get your money and get out from the market. If the trend takes 1 hour, you really have to be patient with 1 hour. If you're doing medium to long-term trading, if a trend takes weeks or even months, most of the time you just hold a position and do nothing. Now let's have a look at challenge 2 and 3 here, and even also challenge number 1. Of course, back to the basics of moving average, or how to identify trend, is that you need to know how to identify uptrend as well as downtrend. Is your criteria clear and easy for you to execute or not? So for example, like moving average, the criteria is very clear cut, simple for you to make a good trading decision. And most importantly, you can see this is an uptrend, right? And on the x-axis, remember, x-axis is always time, right? Uptrend or downtrend, it always takes time to form and takes time to develop. So which is why when it comes to trading, even if you are having the best proven method or even well back tested trading strategies, you still need to have the patience to sit through the trend so that you are able to capture as much profit as possible for along with the trend. All right. Now the fourth challenge is which is margin call. Because you are trading futures trading is very important. You need to take note of this margin call. You are trading futures, you're not trading stocks, so make sure you have sufficient money in your trading account in order to trade futures. So I understand that these days the initial margin might come down a little bit, but it's still important for you to have more than sufficient money in order to trade the futures market. A simple and general rule is that it's best to have 2 times or even better 3 times 4 times of your initial margin in order to trade the particular product that you want to trade. And lastly, the very, very important one, okay, take note of this, which is the mismatch of strategy. Now, sometimes, of course, some of you might have gone through trading seminars or learn technical analysis or learn how to trade, whether you learn swing trading, intraday trading, or whatever form of trading. Challenge number 5, a lot of traders definitely make this kind of mistakes, is that you have mismatch of strategy. Now, what do I mean by that is that, for example, mismatch of strategy means if you learn intraday strategy, but you apply it for doing swing trading, or if you learn swing trading, you try to do intraday trading. So which means the strategy that you trade for the particular time frame, you match with an entirely different time frame, and this is very dangerous because, for example, if you learn intraday trading, those strategies are only suitable for intraday only. If you learn swing trading, those swing trading strategy is only suitable for swing trading only. All right. So make sure the strategy that you use fits to the time frame or the particular product that you trade. And most importantly, better is that if you want to trade different markets or different time frame, it is best for you to revise or redevelop a strategy that is customized and fit the particular time frame or the product that you are trading. Okay, don't try to cross over to different time frame to trade. And this challenge number 5 is the one of the major mistakes that a lot of traders repeatedly doing over again and again. And no, they think that which is why they go for attend courses over courses over courses, and still none of any trading strategies works because the strategy that they do always mismatch when it comes to application. Right, so take note of how to solve your challenge number 5. So let's go back to trend trading. When we do trend trading, we always falls back to these 3 steps. Identify your trend. Step number 2, look at your criteria, whether is it time for you to enter or even exit the market, and make your trading decision. So that's it. Let me wrap up for today's session. There are 4 key takeaway points. Most trading strategies are actually trend trading. In fact, more than 95% of trading strategies in the market are actually doing trend trading. And trend comes in all types of time frame, primary, secondary, and even minor time frame. And number 3, very important, this is the nature of trend. Trend definitely comes with volatility, fluctuations, it has ups and downs. So you need to be able to accept the nature of trend. Once you're able to accept the nature of trend, you are actually at peace with it. It becomes your friend already. Whatever the trend does, all you need to do, you don't have to get frustrated or angry with the trend. All you need to do is actually ride along with the trend. And lastly, the 3 steps for you to identify the trend, follow your strategy, and make the trading decision. And lastly, I have also shared with you the 5 challenges for you to solve your trend trading challenges. So that's it for today. Hopefully you have learned the important things about trend trading so that it solidifies and give you a solid route in terms of doing trend trading. So I pass this back to Ting Ting.
Now we're going to open for the Q&A session. For those who have any question, you can click on the Q&A box and send in your question. Once you finish typing your question, please send it to all co-hosts. Now, while waiting for the question, can you please take a very quick 1 minute try to fill in the feedback form for us, because the whole session, the only things that we require from you is to help us to fill in the feedback form. Especially today is the last session for the English session. So let's say, for example, you hope to to learn other topics, right? You can even fill in the feedback form as well. So the feedback form is very short. We appreciate your help to help us to fill out the feedback form. There are two ways for you to fill out the feedback form. First, you can use your mobile phone, scan this QR code, and you can fill out accordingly. Second method is in the chat box. I believe our admin already put up the chat box, the link. You can click on the link and you can submit your feedback form to us. So I'm going to give you about 45 seconds. Please provide us with your feedback. For those who have any question, you can start to type in your question in the Q&A box. Now, learning through Q&A session is the most important things, because some of the content is not being covered during the session itself. So I repeat, a quick one, you can scan this QR code to provide us with your feedback. Alternatively, you can click the link in the chat box to provide us with your feedback. Last 20 seconds. Okay, time's up. For those who already submitted your feedback form to us, we really thanks for your participation. For those who not yet finished, you can continue to finish it until the end of the session. So don't worry about it. Now, meanwhile, CY, are you ready for the question?
All right.
We have a number of questions here. Now, the first question, a bit lengthy. I still do not have time to interpret it. Maybe you can help me to do that. Now, he's asking if I'm going for direction trading, I'm using a 4 hours time frame. If structure, I'm using 1 hour time frame. Entry, I'm using 15 or 5 minutes time frame. What should I do when the entry time frame direction is against the 1 hour or 4 hours time frame?
Okay, this is one of approach whereby usually people do this is intraday trading or very short-term trading. So this is a form of using multiple time frames. So one of the challenge in using multiple time frames is that you might have contradict direction across different time frame. For example, 5 minutes, 15 minutes might be saying an uptrend, but the longer time frame, 1 hour, 4 hours is actually a downtrend. So when it comes to contradiction, what can we do is that it is always best, at least for me, is that to stick to one time frame will do. Because remember, when you use different time frame, just now I've shared with all of you one theory, remember, which is the Dow theory. So Dow theory means it has a minor trend, secondary trend, as well as primary trend. So the shorter time frame that you use, for example 1 minute, 5 minutes, that becomes it will become your minor trend already. And then your secondary trend would be your 1 hour, 4 hours, and your primary trend would be your daily trends. So Dow theory, it actually suggests is that whatever trend that is happening in the short, minor, or even secondary trend, it always follows the primary major trend. So how I would actually encourage for those who use multiple time frame is that focusing using one time frame that you are comfortable with and stick with that time frame, because once you switch across different time frame, right, it's like just now I shared with one of the common challenges for traders is that the mismatch of strategy. So if you have a lot of strategy across different time frame, so which time frame that you would want to trade? Are you going to follow 1 hour strategy, or are you going to follow 15 minutes signal? So in terms of using multiple time frame, I highly suggest is that it's best to stick to one specific time frame that is that you're comfortable with, one specific time frame that that is proven to be able to make money from that particular market.
Okay, very good. Now, the next question is a very common question, also commonly being asked. Now, the question is, if price has gone far, far away from the moving average, let's say, for example, upward direction, it is still in uptrend, do we still focus on buy or assume trend coming to exhaustion?
Okay, if using moving average, if the trend is very far into uptrend, so in fact, if you are using moving average, the very basic of moving average is that when price is crosses up the moving average line, so that is when you are supposed to enter already. So if price has gone far away from your moving average, so which means you are quite very late in the market already. So if you are sticking to moving average, the basic moving average rule is that it is actually a no. We don't assume the trend to change or come to absorption or anything. What we want to look at is that when the uptrend turns downtrend, so which means the downtrend criteria has already been fulfilled. So that would be the next entry signal for moving average.
Okay, so in short is we never predict the market, we always follow the market direction. Now, the next question is also a common question. How about when there's a change of trend after we onboard?
All right, if there is a change of trend again, we change our position. All right, it's very simple. So when there is a change of trend, for example, if it is uptrend, we hold a position for an uptrend. If the trend suddenly changes in 1 or 2 days to downtrend, so again we change our position to downtrend. Remember, the very basic principle for trend trading is that never ever go against the market. We always want to follow the trend based on whatever tools or indicators that we use in order to identify trend. So it doesn't really matter if there is a changes in trend. Most important thing is that we follow the trend, and if there is changes in trend, of course the first thing is that we want to do our cut loss. Second thing is that we can actually follow according to the trend. And just a simple reminder is that we are trading futures. Good thing about trading futures is that you can trade both directions. So when there is changes in trend, it means you can take the opposite position and take advantage for that changes in new trend.
Okay, the next question is from a beginners. So his question is, which strategies should we use? It seems to me that I should combine a trend line with a momentum so that I can identify the trend and also test on the strength of the trend. Am I correct or not?
That is a workable strategy. However, for beginners, for futures, it would be strongly suggest is that just to focus primarily on the trend itself, because when it comes to combining with other let's say other categories of indicators, it might, you might get confused which is the primary indicator, which is the secondary indicator, and what happens if the primary indicator has a conflict with the secondary indicator. Which one should you be following? So in fact, a solution is that, okay, number one, if there is a contradiction in let's say combination of indicators that whatever you're using, always follow the trend indicator, because we want to follow the trend. Let's say uptrend, we are holding a long position. Only long position is going to make money by following that trend. We are not going to switch direction, I mean taking the opposite direction against the trend. So that would be actually against the trend trading principle. So to put it simple, for beginners or even for experienced trader, is that we want to always follow the direction of the trend.
Okay, the next question, another common question asking about if he's going to use SMA or EMA, which parameters should he use, and which time frame should he choose?
Okay, for which parameter that we can use is that both parameters are SMA or EMA are fine. However, the calculations might be, because it's different parameter, although it's the same moving average, the calculation might have slight differences. The most important thing about choosing a parameter is for SMA or EMA is that it's best for you to be able to backtest according to the time frame that you want to trade. So for example, if you want to hold position, for example, from day to day holding position, you can backtest against a daily chart to see which would be the best parameter for trading daily. If you want to trade hourly, you can also test what are the best parameter in for an hourly time frame. So different time frame would end up with a different kind of parameter. So which is this question is quite similar, I think, to the first question with using multiple different time frames in terms of trading. So different time frame, most importantly, is that if you were to do backtesting, different time frame has different the best parameter that fits to that particular time frame. So most importantly is that when you have the best parameter for that time frame, stick to that time frame itself. Okay, don't cross to another use that parameter to cross another time frame. That would be a big no in terms of trading.
Okay, because of time limitation, we are not able to cover all the questions, but we are going to select those questions that is more relevant to today's topic. So we're going to cover the last question is, this question is asking whether you can share the best strategies for scalpers or not.
Okay, for best strategies for scalpers, all right, the definition for scalping is actually taking a few points and then just get out. So in other words, it's a form of taking a very short-term trading. So however, scalping the approach is actually taking very short-term trading. However, you want to take profit fast and take profit very soon. So in terms of scalping, is that it goes all the way back to the very short-term trend trading approach, which means you want to take advantage of short-term intraday trend. However, the challenge here is that for scalping, the profit that you want to take is actually, it may be slightly less than the intraday trend. So that is what we mean by scalping. But for scalping, the trading model is different from trends trading, because for scalping is that scalping aims to trade big but make lesser. But trend trading is a completely different philosophy, which means you trade small but you aim for a bigger trend so that you are able to capture more profit.
Okay, thanks a lot, CY, for your sharing and also answering all the questions. Now, let me wrap up for today's session. Now, as I mentioned to you previously, the last session for this year, 2023, will be next Tuesday. It will be a Malay topic. So for those who are interested, you can join this particular session to understand those so-called as tokoh in terms of futures trading itself. So the Malay topics will be pengajaran penting daripada pakar pasaran niaga hadapan yang terkemuka. So the speaker is going to cover some of the so-called as pakar itself when it comes to futures trading. So for registration, you can scan this QR code, or else in the chat box, you can click on the link to register. So once you scan the QR code, you're going to drop you in a calendar. So you just need to select the Tuesday itself, which will be the 28th of November. Click on that particular day and register accordingly. Now, the last session for online workshop, this online workshop is really suitable for those who are getting started in futures trading, or you have no direction in futures trading itself. You can join this online workshop. So we are going to have online workshop 1, the complete guide for beginners to futures trading with trading simulation, followed by online workshop 2, how to create an effective futures trading plan with trading simulation. So this will be the last online workshop for the year as well. It will be on 2nd of December. I strongly urge you to share it with your friends, especially if your friends is going to kickstart in future trading. So I'm going to give you 2 seconds, screenshot it and share it with your friends, because this will be the last class for the year. Now, for this particular online workshop, we only allowed 50 online attendees because we're going to cover from A until Z for you to kickstart in futures trading. Now, once you click on the calendar, please select December month and you select on 2nd of December. Then you can click on the session itself and register accordingly. Now, the last part will be the DTS Derivative Trading Simulator. This is a simulation platform provided by Bursa Malaysia, because this is under Bursa Marketplace. So it is a very safe environment for you to trade using virtual money. So what you can do is you can access to bursamarketplace.com/mkt/DTS. Now, the last part will be this Bursa Academy. Believe many of you already heard about it. It's a comprehensive one-stop e-learning platform. For you to access to it, you can access to bursaacademy.bursamarketplace.com. This website is also provided by Bursa Malaysia. So this comes to the end of our session for this evening. Really thanks for your participation. And for those who are only joining for English session, this will be our last session. We are going to see you next year. And thanks for your support throughout the whole year for this 2023. And especially thanks to our speaker for this session, CY Saw. And have a nice night and good night. Bye-bye.
Bye.